Good. Right, welcome everybody. Thursday morning, 8:02. So yeah, great start for us. We've obviously got gold at break even. We've got GBP USD currently running, or obviously coming back into our entry, and then we've got Euro USD as well. So we'll obviously go over everything as well as yesterday. Markets are in a weird place. All right, they're in a weird place right now. We obviously had this big sell-off on the dollar yesterday. We went through this a bit in the boot camp last night, where you want to obviously spend a bit of time trying to understand what's happening with macros and why. All right, and then obviously you can add that into your kind of arsenal. I want everyone to get into the habit of obviously understanding why things are moving and then using technicals to obviously to enter your trades. I personally use liquidity, but obviously there probably is a factoring of technicals in it. So that's obviously how I want everyone to, set everything up. So we obviously had this big sell-off yesterday afternoon. Is it expectation? Is it just everyone's dollars getting up to that price? Yields are getting up to that price where it's kind of everyone's a little bit worried. So this is obviously where risk comes into factor. You might see guys and they might have positions all the way up here. All right. They might have positions all the way up here. And then they, might have then thought, you know what, we're going to take away this one, we're going to take away this one, and we're going to take away this one, but leave these running. That's enough of a pump down to obviously, just to drop confidence. We obviously spoke about this yesterday in the dollar. All right. So that's what we've got to be looking out for. So if there was a change in overall confidence, okay, dollar would have, had this nice rebound here because it kind of has to. But obviously, then we would see a nice tail off through here and potentially back challenging this 98,500. All right. What's ended up happening? This has held strong. We've had a nice rejection coming into the middle of Asia. We've had a nice push up here. We are struggling to break through here, but obviously we are pushing to the upside here. All right. So we are pushing to the upside. So it's looking probably, I'd say about a 60-40 probability. So it's not clean. I'd say 60% we're going to come back up into this area, probably 40% we're going to come back here. All right. But obviously, the tides are obviously tipped in our favor that we've got this nice bit of continuation here. But that to me means a dollar until something big happens is going to be stuck in this range here. All right. And obviously that's the useful bit about drawing on, your, potential every 500. It does, work. You can see here cleanly. You can see here, I've had no liquidity consolidations before there, popped straight back up, retested, popped up, retested, popped up, so I don't have to explain why it's important to obviously have every 500 marked up on the dollar. It really helps you. All right. In regards to yields too, obviously exactly the same move. There is a bit of worry around yields at the moment. Government bonds, are they kind of a bit exhausted? Because we're in this very we're in this strange market where yields aren't popping up because dollar is doing great. Yields are popping up as protection, as hedging, so there's always going to be, they've squeezed all the way up here, and we've got what's called exhaustion, now. And I do think, yes, yields should be popping back up to this area. Outlooks haven't really changed. We've just heard a few rumors, which could have been created from obviously random tweets. Right, nothing concrete has come out yet. So let's, we'll wait and see how the kind of week pops out. We got obviously Labour data coming out today. So yeah, it's going to be one of those days where, we're obviously going to have to, just obviously monitor, London, and then see, are we going to get this continuation to the downside, or was this just purely people just taking some profits off the table, and we're going to creep back into this kind of, area here? All right, that's what we've got to be aware of, right? Stocks. Yeah, if we look at them, yesterday had a very, very nice pump up. When we're obviously looking at aggression here, the stock market seems to be rebounding super quick. All right, and which is quite interesting because it shouldn't be where it is. And obviously, this is what I was speaking. If you guys haven't watched the YouTube from Sunday evening, watch it, because obviously we speak about the AI, kind of sector propping this whole, stock market up, or the equities market up. So we're kind of halted. So that to me also tells me, right, you know what, London open, there's not fresh buyers coming in, or we'll be challenging these highs here. All right. So, you also have to identify that, look into to that. And then obviously we're going back into oil, which is in kind of recovery mode. If we look at the day yesterday, we're in a bit of recovery mode. We're coming up to this 100 mark, which is always key. Anything above, well, even where it is now. But that means, to me, this means that inflation is still a little bit out of control. All right, because we are starting to creep back up here. Chances are we'll probably end the week up here if nothing else happens. All right, so we've now analyzed equities, yields, do dollar, and obviously oil for inflation. All right, so still obviously have to be going with the dollar. As long as we're trading above 99, I'm going to be buying it. So looking into obviously our positions that we've come into this morning, chosen three. All right, first GBP USD. Even with this push up here, it didn't cleanly break through this previous high here. You can see this previous high here. We've not closed above it. So to me, that means that this is potentially holding. Yes, we could be forming a new higher high, a new higher low, higher high. But obviously, overall outlook, is that, yeah, liquidity was here, it was pushed in, and it's rejected, so it's kind of challenging it again right now. Could we challenge this area here? Yeah, potentially. I'm going to be monitoring it over the next kind of hour. Euro here, I think I might even take this one off the table. It's moving so slowly. We obviously haven't triggered yet, but obviously, that's needless to say, might trigger. Aussie, I just don't like it right now. We had this big move during Asia because we had the unemployment rate, like we've been speaking about, unemployment rate, raised zero point 0.2. All right. So that means employment, inflation is high, employment is not under control. What does that mean for obviously Aussie? It means that, yeah, they need to do something to resolve this. So obviously having a bad unemployment rate is not good for any currency. Every country needs as many people in work, so as many people are spending, and they're spending money they've earned. They're not spending government given money, because that's just pointless. So these are obviously all things that we need to be aware of. Last one, next one, USDJPY. Actually, like I'd said, we only want to be looking to probably sell this from this kind of area here. And I do think we are due another one of these candles. We're just going to have to wait and see. I think the next one will be even bigger, because I think it's going to be the right timing for USD JPY to yeah, to kind of really capitalize on some dollar weakness, which we've got dollar weakness at the moment. We've just got obviously inflation. One thing that I am very, very aware of, and that's why we're keeping stops nice and tight, is if we get an agreement, I'm expecting dollar to come probably past 98,500 and be trading back around 98. That's what I'm expecting. So we do need to be aware of that. That obviously that could happen. There's been, kind of whispers of agreements being, sent back and forth, but who knows? Everything's just obviously speculation at the moment. And then we got gold. Beautiful entry on gold. We got stops at break even. So if I show you this one here, our entry, if I move it here. So obviously, I had a few questions from new members. Aggressive entries are these three here. All right. But what you want to do is split up where you would normally say you entered one lot across one on one entry. You want to be entering 0.33, say, for example. So at least you're split up between the three. So just be aware of that. But yeah, beautiful entry. Starting to obviously come to the downside here. You guys can't see that, but obviously, yeah, gold, lovely, lovely trade here. We're currently, oh, here we go. Currently about 188, 190 pips on gold so far. So potentially I would like to let this one run, especially after yesterday afternoon. So I'm willing to kind of take a bit of a risk here of obviously this one coming to break even. I've cancelled these two higher entries, but obviously I want this one to just run a little bit further. But I am kind of aware that, yields have popped up, but they're kind of moving, sideways a little bit. And obviously, dollar is struggling to break through this. I think if this is the real telltale here, if dollar can break through this level here clean, then I think yes, our probabilities increase where we're going to be expecting price to obviously, potentially 80% going to pop up here, 20% going to pop down here. So this is how we want to, finish. We want this to pop up. We've got an hour and three quarters left of this 2 hour candle. Want this to continue to the upside. And obviously that's going to push GBP USD down and that's going to push gold down too. Whoop, that's going to push gold down too. So very, very, this is how our trading's been the last couple of weeks. It's been very, very relaxed. So there's obviously one thing that I can't ever account for, which is profits being taken off the board. But obviously you can kind of see how we work through the process of direction. We're not just flicking on a random chart and going, right, you know what? I'm going on the 5 minute time frame. We've got some consolidation here. I'm going to mark this one out. Oh God, I just want this to break above, and then I'm going to enter. So we're obviously not trading it like that. One thing that I think is very, very important is that you can always, have someone next to you and you can explain why you've entered this trade. Well, if you've not used any kind of macro outlook, it's very, very hard to explain it, you know? So yeah. Does anyone have any questions? Does anyone have any questions? Let's just go through this. Lots of stuff that everyone's up to at the weekend. How do you identify the exhaustion? Is it just candle cluster consolidation? It is kind of a bit of everything. All right. You've got to kind of always be, and the more that you look into, macros, the better. You've got to basically identify, is there a reason why yields obviously, and dollar are obviously trading this high? All right. Should they be trading this high? Is it because the, central banks got it right? Or is it just because of worry and, fear? And obviously anything, regarding worry, fear, speculation, there's always going to be times where, and I did mention it yesterday morning. I just wasn't expecting it to happen yesterday afternoon, and I wasn't expecting it to happen as rapidly as what it did. But obviously, luckily, stops are in place. We were covered. So, but obviously, we've then got to look at, how quickly prices has popped up. can this continue? And you do need a good few uh, candles. You can see here dollar, you know, came up to this price, then it tanked right down. Come up again Tuesday, was struggling. This is slow price here. All right. We should have tapped this 99,500. And that was my anticipation, was that we were going to come up and challenge this. However, that didn't happen. And then obviously this happened very, very quickly. So it's, you do have to not learn to read candles, but look a bit deeper into what's happening. If we look into like these two candles here, price has tried pushing down, but it's pushed back up, but it hasn't pushed high enough. Again, tried to push back down, but hasn't managed to push up. Again, this candle here tried to push back down, hasn't pushed up. Similar with this one here, hasn't really come into anything, hasn't broken through anything, nothing. Indecision here, right? We've then, started the, session how we were expecting yesterday afternoon. We had this nice push up here, but then we had an instant rejection, and if I'd show you this on a 5 minute time frame, if you think our entries are coming out at 1:30, really, really happy with this area. Had a nice push up here, looking great, and then bang, bang. You cannot account for a 5 minute candle like this. It's just horrible. But this one's beautiful. It's going in our way today. So that's how we've got to look at it. Pound dropping. Look at that. Gold should be dropping. Yeah, beautiful, 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 beautiful. I'm actually close to my target of this morning overall. So I'll keep you guys updated on that one, but really, really happy. Yeah, and obviously hope you guys are too. Ian, uh, is yeah, central banks, yeah. But basically, a currency should be pumping because central bank has got it right, but that's very, very rare. Is there a way we can preempt potential profit from a sudden dollar drop if Iran ceasefire is announced out of the blue? No. Like that, there is no way of, it's just pure kind of, luck. You got to be watching the 1 minute kind of time frame. If you even look at the gold push yesterday, even on a 1 minute, it's not clean, like you might have wanted to enter potentially after this candle here. All right, but then there's a risk of exposure. All right, so you might have thought, you know what, 1 minute, 2 minute, 3 minute, it's cleared this high, but then where'd you put your stop loss? Your stop loss is going to have to be here. All right. And then your TP would have to be at least a 1-to-1. Well, did it even hit a 1-to-1? No. So you've got to, I always say everyone's looking for these huge moves, but actually a market which is quieter and if you stay on point, those are the moves which you kind of, want to catch, so those are those moves that you want, all these small ones, because you got it right and it's easy to read. All right. Don't always chase the huge moves because they're tricky to kind of get hold of. But right, if that's the last question, I'm going to end it here. We've had a very, very good morning this morning. Just to keep you updated, I'm probably going to look to potentially take some profits off the table within the next kind of 5 minutes because I'm pretty happy. So yeah, have a great day, everyone, and let's smash it. Have a good one, guys. Have a good one.